Thanks so much for tuning into this leg of IPO Adda. We are in conversation with Mr. Ravi Goenka of Laxmi Organic Industries. They are an exporter of multiple chemicals, including, from what I learned, ethyl acetate. They supply to customers across the world. And it's a pleasure to have him today to talk about his thoughts on what the company is all about, so that you can take an informed decision about how you want to go about applying to the IPO. Mr. Goenka, good having you. Thanks so much for joining in. Hope all is safe.
Thank you very much. Really appreciate the time that BloombergQuint has given us, and happy to share our experiences and what our company stands for.
Yeah. So can you tell us a bit about it? Because specialty chemicals is a red hot space, and you and one more company parallelly are hitting the markets very, very shortly. What is Laxmi Organic all about?
So Laxmi Organic actually was born in 1990. We have almost a 3-decade proven track record of generating profits. And primarily, we are in 3 segments. One is the acetyl intermediates, one is the specialty intermediates, and as we talk today, we are getting into fluoro specialties, which we call the fluoro intermediates. These are the 3 engines of our company. And we play dominant roles. Of course, we have no revenues today. Our plant that we bought from Italy will be dismantled and brought into India. But in the first 2 acetyl intermediates and specialty intermediates, we play dominant positions in India and in the exports overseas, like you said.
Okay. Can you tell us a little bit about the difference between the 2 segments? I'm guessing that the term specialty typically evokes a belief that is higher margins, higher return ratios compared to the other businesses. So can you tell us if both are specialized products, or is one a commoditized, one is specialized, and therefore what is the mix currently, and how will the mix be once the plant imported from Italy becomes operational?
Sure, sure. So specialty chemicals is what you bring in the value chain. We start from basic raw materials of the petroleum industry and value add it across the chain over many platforms of chemistry to create real value for the customer. So in the acetyl intermediates, we have bulk products like green solvents. Our main product over there is ethyl acetate. And we were pioneers in setting up the first ethyl acetate plant, which was based on a continuous technology and which gave a consistent quality way back in the early 1995s. So we today handle more than 500,000 or 500,000 tons of product in our company, in and out of our company. So that is the scale that we work on. In the specialty intermediate business, we are into much higher specialties, again, from a very basic raw material. We make a lot of complex processes, and we have added chemistry platforms, maybe ethoxylation, maybe chlorination, maybe many other such chemistries to add value to that basic component and deliver it to the agro and the pharma segment. And in this segment, we are the only manufacturers today in India and play a leadership role not only in India, but also in the world. We are the first stop for anybody requiring products from our chemistry platforms.
Wow, that's heartening to know. So you're saying that you are the dominant force on the global side, in the specialty side that you are present in.
Yes, that's right.
Is there a market share concept out there? And if so, what would your market share be?
So there is a market share concept, but this is not, what we do. We have a very wide portfolio. In fact, the largest portfolio on the base chemistry platform that we work on. So there is no probably other company who has such a wide portfolio of products in the world based on this platform of chemistry. And therefore, I wouldn't say there is a market size concept. The market is growing, and the more and more you get into complex chemistry based on this basic platform, the market keeps on growing. So even today, we are working for many new products that have not been produced by anybody from this chemistry platform, and making complex products.
But you would be, just for argument's sake, you would be over 50% market share easily.
No, you cannot say that. That is not the right way to judge it, because there are many bulk products also that are made, and we are slowly weaning out of bulk products from this platform to get into more and more value-added products.
Okay. Would you largely be an export-oriented unit, or would you believe that the whole thing of Atmanirbhar Bharat gives you an opportunity to be the dominant franchise in the products that you are in within India, to import substitution, so to say, if at all?
So you are absolutely right. Today, India offers the opportunity, being a consumption country, and the billions of dollars of specialty chemicals that are imported into India today offer a absolutely unprecedented opportunity for Indian companies to scale up and take advantage of this opportunity. As far as Laxmi organic industry goes, we today export almost 35% of our top line, whereas 65% is still for the domestic market. And in our specialty intermediate segment, we have more than 55% of the domestic market.
Okay, got it. So,
and our acetyl intermediate, we have more than 30% actually of the.
Okay. Yeah. Okay. So would you be able to tell us, sir, what's the breakup between the specialty business and the acetyl business currently? And once the plant from Italy becomes operational, how would the breakup look like, say, 1 year out?
So today, in our last financial year, we have given a top line revenue of almost 1,500 crores, yes, out of which 2/3 will be the acetyl intermediate business, and 1/3 will be our specialty intermediate business. Please note that also acetyl intermediate business would include other chemicals, like we are one of the suppliers to the government's oil blending program for the oil marketing companies. We also make value-added products from ethanol, which are much more specialty products, although they form a smaller basket, smaller size of the entire acetyl intermediate business.
Okay. So currently it's 2/3, 1/3, and once the plant from Italy becomes operational, that could change. But
absolutely,
you won't be able to second guess right now.
It will change. That's right.
You might not be able to second guess right now.
We can. I mean, it will definitely change, and it may probably go to half and half.
Okay. Wow. Okay. Pray tell me, since you brought up numbers, and viewers, maybe my numbers that I've given might be slightly wrong, because it's not 1, 2, 3, 4. I think they've done revenues of about 1,534 crores, if I'm not wrong, in FY20, with profits of 70 crores. But the first half, Laxmi Organic, unless I'm the revenues are at 813 crores with a profit of 45 crores. So tell us, Mr. Goenka, just dwelling on the numbers for a little bit before I ask you a couple of other business questions. FY20 or FY19, both revenues and profits seem to be a bit flattish. Was there any particular reason why it was not a growth here? And based on what you've done in H1 FY21, you seem to be on track to show a fairly healthy top line and bottom line growth in FY21 over FY20 in a COVID year. Now, how did both of these things shape up?
I think you are spot on. There's no question about what you are saying, and let me explain it to you. In the year 19 and 20, we were ramping up our fixed costs. We had a much higher fixed cost and depreciation. We had just commissioned our hydro project as well. Probably we are one of the few companies, I don't know, I haven't heard of any other company in India who has their own captive hydropower project, a green power to us, which is a larger capex and a longer gestation period. Other than that, we ramped up tremendously our R&D and our own people, and our fixed costs were high. Another thing, in 20, we were unfortunately affected by a very large flood in the August of 2019, where it was once in 30 years that we had a flooding, and the entire factory was in floods, and we had to shut off production for 30 days during that time. Also in March, later on last year, we had the COVID-related issues where we had to again shut off production for 10 to 15 days. So our actual production is down by 15% in the year 20. And of course, therefore, we definitely say that the year 20 is an aberration. We are definitely back on track. The first 6 months, like you said, are robust. And we feel that our next 6 months also are going to be very strong.
Okay. In light of that, and in light of the dominant positions that you enjoy, Mr. Goenka, what are the kind of return ratios that you enjoy? And coupled with the fact that you will have a new stream, if I can use that term, of business by virtue of your plant in Italy coming on stream soon, how would these return ratios shape up, say, over the course of the next couple of years? Operational metrics, margins, return ratios, what have you?
So I think you may have got the numbers, but our ROS is almost 22%, and we will continue to deliver that, and we will continue to be at those numbers. Of course, we are getting into very exciting chemistry of fluorochemicals, which will have much higher margins than even the SI business. Our large volume products in the AI sector are definitely at a lower margin. SI is a much higher margin, and we expect fluorochemicals to be even much higher than that. So our entire basket will be a healthy 15% plus of EBITDA margins as we go ahead.
Got it. And this 300 crore, because the entire IPO, of course, is split into half. Yellowstone sells half, and the remaining 300 crores is going to be used for multiple purposes, including setting up this fluoro specialty premise. Would this be all the capex that you would be doing for the foreseeable future, or do you foresee the need to have higher capex as well, and maybe some of that could be done by internal accruals?
So I think we also had a pre-IPO, as you may be aware.
Of course, Malabar.
Yeah. So total monies that the company is issuing fresh equity for is about 500 crores. We have 400 crores of capex already on the table and being executed at different phases of its cycle. Out of this 400 crores, we have 250 crores that is allotted to the fluorochemical business, and 150 crores is by and large allotted to our specialty intermediate business, where we have signed off long-term contracts with leading MNCs to supply them on long-term basis for their requirements. So a dedicated plant is being set up for them, and all of this, I believe, should be done in the next 10 to 12 months. We should have commissioned this within this financial year, and those results will definitely show in the next financial year.
Very heartening to know. So, Mr. Goenka, in which case can I request you? I know you won't be able to give me exact numbers because of regulations, but would it be safe to assume that there will be a certain minimum growth rate that you envisage for the sector and for your company over the course of the next 3-4 years CAGR? Would it be safe to assume that you would probably grow at least 15% CAGR for the next 3-4 years?
See, we will grow definitely. If you have seen our segment that we cater to, all our segments are growing at 10 to 12% and even more. Please understand that most of our chemicals, our bulk chemicals, for example, are used in shampoo sachets, wafer lay packets, Maggi noodle packets, etc. And if you see Europe, the entire flexible packaging industry is 70% of the consumption of our acetyl business. Whereas in India, this is far lower because other solvents are allowed to be used in food packaging. The government is coming up with the rules and regulations to remove these other solvents, and therefore the scope of increasing our own capacities for acetyl business will be far higher than the growth of the market itself. So definitely what you say will be very much possible.
Great. Well, we wish you all the best with regards to the IPO. Do well and stay safe. And I look forward to talking to you, of course, post your quarterly numbers as well.
Thank you so much. Look forward to that.
All the best.
Good luck, and thank you for the time, and thank you, BloombergQuint, for giving us this opportunity.
Thank you for talking to us.
Thank you.
And viewers, thanks for tuning into this leg of IPO Adda.